Good morning, everybody. Mike Vacchi here from PrincetonTrader.com for NTMarkets.com with your Monday morning pre-market webcast. Okay, if you missed last night's webcast, check it out. It's up on the website. It's on my Twitter page at Princeton Trader. We spent some time, about 5 minutes, looking at the daily chart and just very briefly saying, look, when we talked Thursday, when we talked Friday, I had indicated that the Bears could not let the Bulls establish 1670 as support, and they could not put another hammer in on the chart. That is establishing 1670 as support, and this is putting another hammer in on the chart. So the Bears are not in a very good position today. They've really left themselves exposed to much higher prices. With the FOMC coming up Wednesday and non-farm payrolls on Friday, the reaction to that news is going to be what not only probably the next week is about, but the next month, as far as who's got the ball to run with it. So the overnight has been pretty muted. What I want everybody to concentrate on is the pivot zone here. You've got the daily at 82.75, 3-day coming in at 82.17, and the 9-day are 84.25. So basically a two-handle triple pivot zone that I think is going to be pretty critical throughout the day as far as a magnet for price. I would expect, as I said last night, I'm expecting a morning dip to come in mid-morning, maybe to test this area here down 79.25. I'm actually expecting something maybe a little bit deeper, but I mean, if recent history holds, that dip is a buy, and then you're looking for higher prices through the course of the day. It's a situation where if you've got 1670 underneath you and you're a dip buyer, you can feel pretty good about your risk and where your risk lies. And that's going to give you confidence and embolden you to do what you've been doing for the last year, which is buying dips and running the market higher. So it's really hard to be bearish this morning. The Bears haven't given you much of anything to be bearish about. The other thing I will mention is that if we do hit higher prices, if we do break through 95.5, I've said for the last couple of weeks, if we do that, 1700 will happen. You're looking at 1700 to 1703. If we're going to punch the Bollinger Band, you're looking at something, here's the daily chart, something much higher. The Bollinger Bands are curling in the 1717 quarter area, and you're looking for something, in the area up above 1720. A bullish reaction to the news this week could do it. So if you're a bear, there's a point where you have to sit back and say, you know what, there's a better place for me to get short, because it's certainly not 1683. You've got 70 is established as support. You've got the 20-day moving average coming up to meet that, and your 12 handles below the highs. So you're in the textbook definition of no man's land. If you're a bull, you can't just blindly come in here and start grabbing shares, because you really do need a dip. You need to keep establishing a dip that is support that needs to be bought. And at the same time, one piece of news, one downgrade that's for real, one sovereign downgrade that's for real, anything, with respect to the Fed as far as some kind of plan with respect to QE that the market isn't anticipating, and we'll be right back to where we were, trading below the middle band. So you're seeing a lot of jerky movement in the tape. I think that's a lot of people that are nervous. This is definitely a market that's to be traded. It is not a market that's to be held. If you're trading, if you're trading the mini, if you're trading futures, you get in, you get what you need, and you get out, and you wait for the next setup. You should not be saying, this is the day that I'm going to swing short the market for 100 handles, or this is the day that I buy that this is the dip and I'm buying it for a move to 1750 or some crazy number like that. It's not that kind of market. Two-sided market, trader's market, and act accordingly. Everybody have a fantastic day. Mike Vacchi, PrincetonTrader.com. Check out the website. Come check out the chat room. We are trading them in there. We are not holding. We're not swing trading them, at least not yet. We'd love to have you come on in, check it out for a couple of weeks, and see if it fits in with your style. I'll be back tomorrow morning with another webcast. Trade them well.